Good morning and welcome to the BizNews Daybreak. I'm your host, Ruan Erasmus. We're tracking a massive shift in the tech landscape and mounting pressure in the global energy markets. First up, our partners at Bloomberg give us the latest overnight world news.
Cole Thomas Allen, the man accused of opening fire outside the White House Correspondents' Dinner, made his first appearance in federal court. Allen was charged with attempting to assassinate President Trump along with other federal offenses. Acting Attorney General Todd Blanche.
Violence has no place in civic life. It cannot and will not be used to disrupt democratic institutions or intimidate those who serve them, and it certainly cannot continue to be used against the President of the United States.
Allen faces a maximum sentence of life in prison if convicted of trying to assassinate the president. Potential motives, though, weren't clear. But authorities have said Allen was targeting Trump officials based on a manifesto he'd reportedly sent to family members blasting the president and his administration. Here is Jeanine Pirro, U.S. Attorney for D.C.
There will be additional charges as this investigation continues to unfold. But make no mistake, this was an attempted assassination of the President of the United States, with the defendant making clear what his intent was. And that intent was to bring down as many of the high-ranking cabinet officials as he could.
The White House said U.S. officials were discussing Iran's latest proposal, but maintained red lines on any deal to end the war that includes preventing Tehran from obtaining a nuclear weapon. The comments followed reports that Tehran proposed an interim deal whereby it reopens the Strait of Hormuz in exchange for Washington ending its blockade of Iranian ports. The proposal would also postpone negotiations over Iran's nuclear program. Here's Bloomberg's Laura Davison.
What this suggests is that the U.S. is now looking at sort of a multi-phase set of talks here to come to some sort of conclusion of that, dealing with sort of the acute pain points right now, which is sort of the closure of the Strait of Hormuz. You have both the U.S. saying that they will not, agree to anything until Iran opens up the strait, and Iran saying they will not open up the strait until the U.S. ends their blockade. So you have a little bit of a detente there. So this specific offer would address that.
That's Bloomberg's Laura Davison. President Trump had convened a meeting of national security officials to discuss the Iranian proposal. The White House said Trump would address the matter very soon and that his red lines with respect to Iran have been made very clear. In business news, China has decided to block Meta Platforms' $2 billion acquisition of agentic AI startup Malus. It's a surprise move to unwind a controversial deal that's drawn fire over technology leaks to the U.S. Matthew Bloxham covers tech for Bloomberg Intelligence.
As we know, the world is shifting very rapidly towards agentic AI as a kind of near-term future of that technology. And yet it's in an area that Meta's been looking to kind of boost its capabilities. Now, Malus was originally a Chinese-founded business and reincorporated in Singapore. But it's got Chinese founders, and those Chinese founders are in China, and they're being blocked from leaving the country.
Meta said in a statement that the deal complied with applicable laws and it expected a resolution to China's investigation without elaborating.
Oil prices are back in focus as tensions around the Strait of Hormuz continue to disrupt global supply. Dan Striven, Goldman Sachs co-head of Global Commodities Research, explains why they've hiked their forecasts again and the reality of demand destruction at the pump.
Yeah, so briefly it looked like we were on track for a normalization in Hormuz flows by mid-May, when on that Saturday morning we did see a big pickup in flows when on Friday Iran did communicate that the strait was open. But then it turned out that very quickly flows dropped back again. And over the last 2 days, actually, flows have been lower, roughly 5% of normal levels versus a 10% of normal levels since the start of the war on average.
We've gone sometimes down from day to day and headlines go back and forth and trying to make sense. And there are times markets react and there are times markets are like, we're not going to touch this one. We're just kind of waiting. How do you know? How do you have the conviction that you think this is going to be going on for much longer?
Yeah, so in this environment where there's so much uncertainty about the geopolitical inputs, but then also the logistics and shipping inputs, I think the value add we provide to investors is tracking, nowcasting what's going on, and then mapping scenarios for supply, demand, and taking some geopolitical assumptions and translating that into price and trying to help investors to think about those different scenarios. Our conviction is stronger on the pricing framework than on the exact set of geopolitical assumptions.
Go ahead, Carol.
But is there an assumption that, we've seen no talks this weekend. You're assuming, I think the latest we were talking about that maybe Iran offered opening up the strait and putting the nuclear and the uranium kind of on the side for now.
Talks about the uranium.
Correct.
Not like, here's uranium, we're going to put it to the side right now.
I meant the talks, yeah. Like, just let it around. But I mean, how do you gauge what to kind of trust? Because I think the thinking has been, it's going to happen. And one day it's going to be like, everything's fine, back to normal. It doesn't go back to normal quickly, does it?
No, especially on the production side. We actually think that even by December, the recovery in oil production in the Persian Gulf as a percent of lost supply will only be around 90%. So still 10% of the lost supply in our base case is not back by the end of the year.
Which is significant, right?
Absolutely. Yeah. We estimate that the world will lose cumulatively about 2 billion barrels of Persian oil production by year end. To put that in perspective, that is roughly 20% of global oil inventories in the whole world. The longer the Hormuz supply shock lasts, the more the rebalancing mechanism will shift from inventory drawdowns, which you cannot do forever, to demand destruction via higher prices. We are seeing pretty significant demand destruction exactly in the jet fuel aviation market, also in petrochemical feedstocks, especially in Asia. And we do think that if this lasts longer, that the market may have to rebalance via significantly higher product prices as opposed to crude prices. Ultimately, product prices are what consumers and businesses ultimately pay. Our Brent upgrade to $90 per barrel by the fourth quarter. That's $30 higher almost than our forecast before the war. That would be even higher, around $100 per barrel, if we did not incorporate some significant demand losses. We now look for global oil demand to stagnate, even if at the start of the year, we were looking for pretty solid oil demand growth, just above 1 million barrels per day.
In the tech world, a major partnership is being rewritten. Microsoft and OpenAI have officially amended their exclusive deal, a move that opens the door for OpenAI to work with rival cloud providers. Bloomberg's Ed Ludlow breaks down what this non-exclusive license means for the industry and Microsoft's bottom line.
Yeah, I think the easiest way to do this is state what the net effects of the amended agreement are. The first is that OpenAI can now basically run and sell any of its products on any different cloud. They had already done deals, for example, with AWS earlier in the year, but that's now more codified. Microsoft has access to OpenAI's underlying technology through 2032, but because the license is now non-exclusive, anyone can now have similar rights and do similar deals with OpenAI. So that's interesting, right? The stock fell pretty profoundly in the moments after the red headlines, down 4%. It's now paired some of those declines. The bit that's a bit confusing is that Microsoft will stop paying OpenAI. Microsoft stopped paying OpenAI a share of revenue. And how that was working was any revenues that Microsoft generated from a technology that had OpenAI's technology integrated into it, they would then share with OpenAI. But the reverse continues. So OpenAI continues to make payments to Microsoft, which is its biggest investor, largely because of the obligations OpenAI has to Microsoft for ongoing access to compute and Azure, and all of that codified back in October of last year. So basically, it's now open market. OpenAI can do business with others. Microsoft is less restricted as well, and the market's taken a moment to make sense of it.
That's the latest from the morning headlines. We'll be back tomorrow with more. I'm your host, Ruan Erasmus, and you've been listening to the BizNews Daybreak.